Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, it has been another exciting week for us here. I think the market has softened a little this week, which was kind of expected. Some of the macro numbers that were released earlier this week have definitely showed not the kind of like the outcome that the Fed was hoping in terms of slower growth. A lot of the market now is kind of expecting that 25 BIP rate hike at the next Fed meeting. In addition to this, there's been tons of headlines. One that stood out to me is now that the New York Department of Financial Services is investigating Gemini over their EARN program. And this is after Gemini is part of the bankruptcy proceedings to do with Genesis. So definitely a bit of a mess there. Not sure what is happening with those bankruptcy proceedings as Genesis, looks to try to reorganize. Now I've got a lot of stuff though going on the token specific front. Like I said, there's definitely been a lot going on. So first I'm going to start with Flow. Flow is a layer 1 project. So last week, NFT project Doodles announced it was going to be moving from Ethereum to gaming focused layer 1 Flow. So Flow is backed by Dapper Labs, which is they've raised actually a lot of money. They're backed by a lot of I think Warner Brothers Studios, one of their main investors. But they're most well known for their NBA Top Shot game. And that became wildly popular like end of 2020. If you're not familiar with it, they basically had a licensing agreement with the NBA where like they took clips from games and then basically instead of just like buying an NFT of like a player, you could buy like an NFT of like a player specifically playing this one, maybe they made this crazy dunk move in a specific game. So those went really nuts kind of during the NFT craze end of 2020. But they haven't really had a ton of, successes with different token project launches since then. So the Doodles project is releasing their newest NFT project, Doodles 2, on Flow. So this is pretty much like the most high-profile project to migrate to Flow's blockchain and might spell a turnaround for the layer 1, which has relatively little going on, I would say. So for context, Flow, despite this positive bit of news, is down 5.7% on the week. All right. So last week, Layer 1 protocol Solana announced the release of its dApp store for its new Saga phone, which has slowly started to ship to customers in the last few weeks. Again, if you're not caught up on what the Saga phone is or Sega phone, Solana last year during their conference in November announced that they were going to launch a mobile phone. And the idea is that this would be kind of have more baked in things for crypto native apps. It would have wallet security on the phone. So some really exciting stuff in terms of adoption, because everybody knows that user experience in crypto is horrible. We really need, better user experience tools. We need mobile tools. So this was like really one of those long-awaited things. So the decentralized app store is going to come preloaded on every phone. However, as of right now, there aren't any apps to download. So hopefully some of those will come soon. But the Sega phone offers a model for how, like I said, digital assets could become mainstream in the future. With all this, Solana was down 2.4% for the week. All right, Maple. So you might know Maple. They are a uncollateralized lend and borrow protocol. In the last year, they really suffered a lot of problems with regard to borrower defaults. First following the collapse of Luna and FTX, first following the collapse of Luna and Three Arrows, and then also following the collapse of FTX, they ended up having a lot of their borrowers end up defaulting on their loans and leaving the protocol with about like 80 million in bad debt. So this week they've been plotting a comeback and a bit of a pivot, actually. So the project announced that it's going to move away from uncollateralized lending, which is very tricky business, very difficult for a decentralized product to do. And they're actually going to focus on the launch of new liquidity pools that are going to bring real-world assets on chain. So they're starting with this with the launch of a new liquidity pool with $100 million of trade receivables. So the idea is they're actually going to be allowing firms to borrow cash in advance of receiving their tax rebates and pledge those tax rebates as that collateral. So that is going to be an interesting kind of pivot or move for them. Real world assets is kind of one of these themes that's been picking up steam, just bridging off-chain assets from equities, bonds, any other asset class, real estate, and bringing that kind of credit piece on chain, or making any of those real world asset processes more efficient. So more and more we're seeing projects kind of get into that space. I think I talked about MakerDAO last week, which has been doing that more and more. And now we have Maple, who's just completely pivoted their business model towards that. So we'll see how that one takes off. Maple, despite this news, was up about 2.9% for the week. All right, last but not least, DYDX. Had to mention it. In case you missed it, Arca's chief investment officer released a tweet thread last week challenging the DYDX team regarding their token and use case. DYDX is a decentralized derivatives project that, despite having about 70% market share, their token really doesn't have that much functionality that kind of like accrues that value back to token holders. So they've come under a lot of scrutiny. They take fees from users. They have a liquidity mining program in return where, based on trading volumes, like, users get a large chunk of the tokens, but essentially, like, the token just keeps getting inflated. There's no use outside of voting and governance. And the DYDX centralized entity of DYDX trading seems to be gaining all these fees. So following the release of this tweet thread, I believe it was like last Tuesday, the DYDX team actually announced that it would push back the February unlock of their investor tokens, which was due to start later this week on Friday. So that was due to inflate the supply almost by double over the next few months. So with the pushback of this, a lot of people are questioning, like, did this go through governance? What is the ultimate plan? But the timing was definitely interesting. With this in mind, DYDX ended up flying while the rest of the market's been kind of, down to flat. Last week, it's up 60% for the week. All right, that's all I got for you guys this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.